You can see money growth in the purple was negative for quite a long period of time. It moved into positive territory last year. We're still at a very low level by historical standards, roughly 3.5%. You can see inflation in the green line. It broadly, there is a correlation with money growth. Now, the big controversy right now is, are we stuck at this 2.5–3% range? We do not believe that we are stuck there, and that the big surprise will be much lower than expected inflation, thanks to productivity gains, thanks to the dollar going up, and thanks to monetary policy that has been quite restrictive. And I think Chairman Powell still describes monetary policy as restrictive.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Cathie Wood dives into the federal budget deficit or surplus as a percentage of nominal GDP and asks, have we narrowly avoided a recession? Let's catch her up to know more.
Inflation typically follows money with a lag. And we do think that we will see more gains against inflation. And we're still saying we would not be surprised to see some negative numbers out there. How could we get those if money growth is turning around like this? Well, we would get that if the velocity of money slows down. And it has been slowing down. And I think the uncertainty associated with the transition to a new administration could be one reason for velocity to slow down, taking any expansionary power away from this money supply growth. So stay tuned on that one. We'll land on this very important metric, Bitcoin, the Bitcoin price relative to gold, the gold price. You can see it broke out at the end of last year. It's testing now. We have seen the gold price go up recently, and the Bitcoin price, while it broke through 100 to, I think we got to 108,000, it's come in a bit, and makes sense that it'll be testing a breakout. As you know, we believe that the Bitcoin price has miles to go for all kinds of reasons that we will delineate in our Big Ideas report. Our Big Ideas report will be out in a few weeks. And in that report, you'll see how we get to our Bitcoin price forecast. We are in print, the bull case being 1.5 million. And while we have changed the way in which we get there, we do believe we're going to get there, especially given this administration's sponsorship of Bitcoin. It may even end up as part of Treasury's reserves. So if we're right also that the gold price is unlikely to move out of control in the inflationary environment, meaning disinflationary environment that we see, then Bitcoin will be responding more to its role as a technology and a new asset class than to its role, like gold, as a store of value. And it should continue to pull away from gold in the years ahead.
The U.S. Department of Justice is preparing to sell 69,370 Bitcoin, valued at over $6.5 billion, seized from the infamous Silk Road darknet marketplace. This move follows a December 30 court ruling that resolved a prolonged legal battle with Battleborn Investments, a group that had claimed ownership of the Bitcoin through a bankruptcy estate. Battleborn's case collapsed after the group failed to disclose the identity of the individual who had surrendered the Bitcoin, granting the DOJ full legal rights to the cryptocurrency and paving the way for its sale. The DOJ has emphasized the urgency of the sale due to Bitcoin's notorious price volatility, a point acknowledged by the court. However, the announcement has triggered unease within the crypto community, with many fearing that such a large-scale liquidation could destabilize the market and cause a sharp drop in Bitcoin's value. Despite these concerns, CryptoCoin CEO Kai-Young Ju offered a more optimistic outlook. Ju pointed out that the crypto market absorbed $379 billion in inflows last year, suggesting that it could withstand the DOJ's $6.5 billion Bitcoin sale without significant disruption. He predicted that the sale could be executed within a week, minimizing potential market shocks. El Salvador's President Nayib Bukele viewed the planned sale as an opportunity for investors, speculating that it might temporarily drive down prices, making Bitcoin more accessible. While some brace for turbulence, others see this as a strategic moment to accumulate Bitcoin. This event highlights the ongoing interplay between governmental actions and the ever-evolving cryptocurrency market, which continues to captivate global attention.
This chart, usually I show you really from 2008 forward, where the correlation between this metals to gold ratio, which is in the purple, has been very high when you map one against the other on that scale. That correlation has been very high until recently. We're taking this back to give you more perspective and to show you rarely has the metals price relative to the gold price been lower than it is now. This goes back into the 80s. And this is the period of disinflation. And typically, you see that when that line is coming down, interest rates are coming down as well, if you follow this carefully. The correlation is pretty good. And that has not happened this time. In fact, interest rates have moved in the other direction. And I think there is a lot of fear about inflation, although if you look at the breakdown of long-term interest rates, and you look at the explanation of, is it real growth, is it inflation, is it just the term structure, the longer duration? It's explained mostly by longer duration recently. But if this gauge of economic health, metals to gold, does not improve, then interest rates, we believe, will come down.
Coinbase analysts are predicting a choppy ride ahead for Bitcoin, with limited upside potential in the short to medium term. According to David Duong and David Han, the cryptocurrency's performance may face headwinds due to a slow pace of Federal Reserve rate cuts and increasing sell pressure in the BTC market. The analysts pointed out that the broader macroeconomic environment remains uncertain, with strong employment data and persistent inflation diminishing the likelihood of further rate reductions. Recent U.S. economic data reinforced these concerns, suggesting that the Fed is unlikely to cut interest rates beyond the current 4.25% to 4.5% range during the upcoming meeting. This scenario has tempered enthusiasm for risk assets like Bitcoin, adding to market caution. Additionally, a significant surge in BTC supply could further restrict upward momentum. Coinbase's report revealed that the active supply of Bitcoin, moved on-chain in the past 3 months, has spiked to 4.6 million BTC, up from 2.7 million in October 2024. This increased supply, alongside $90 billion in liquidations by long-term holders, has created a key resistance zone around the $100,000 mark. Analysts believe these supply-side pressures could confine Bitcoin's price within a consolidation range for the coming months, much like the patterns observed during its March 2024 highs. Currently, Bitcoin's recovery appears stalled, hovering within the $90,000 to $100,000 range. These dynamics underline a period of grinding consolidation, leaving traders and investors watching for clearer signs of market direction. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.